All right, welcome everybody to the Bookmap Academy meeting. Do this every Thursday so that you can get some feedback on coaching and mentoring from your trading. If you're interested in this, it's like I said, available every Thursday, and we open the mic for you so that we can hear from you what you are thinking as you're going through the trade. And let me show you how to sign up. Go to bookmap.com, click on the More button here. Under Community, go to Bookmap Academy, and then read through it here. You can apply here. It's a pathway to becoming not only a better trader, but as you do that, we're very thankful for you creating content and then showing us, your trading activity, so that for that we will give you Bookmap. You'll become better, and we're happy to reduce your trading costs at that point. And then you can continue on. That would be step one, is just applying to the Bookmap Junior Academy, then being accepted, and then you'll be the next hurdle here is step two, is to reach a quantitative and qualitative threshold, and then we can give you Bookmap for free. If you double your quota, it's just one per day. You can actually get the MBO bundle as well for free, or other add-ons. You can become a coach in step three, and if you do that, we give you data as well for free, and you can become a Bookmap streamer. Is the final step here. So we already have Doug Pless and Tom B. And as streamers, Moby was also in there, but he has since left streaming for Bookmap. Anyway, apply here. This will also allow you to partake in the Bookmap Blue Jacket competition. Okay, so we've integrated that together, and if you want to join that, you can use your phone to take a QR screenshot of this. You'll post your content in the Bookmap Academy room, and then put hashtag BJC for a Blue Jacket competition. And you can win all sorts of stuff here. So let me show you that. There's a separate page for it. It's just a Bookmap Blue Jacket, or bookmap.com/Blue Jacket, and you can go through here. When you sign up for this, you will be automatically enrolled into the Bookmap Academy as well, and you will post your trades within the Bookmap Academy chat room. Okay, just put that hashtag in there, BJC, and we'll know that that's what you're looking for, is to join this competition or partake. You can win 3 months of Bookmap for free plus data, and there's a runner-up as well, the white jacket, which would be 1 month of a Bookmap subscription. No data included on that one though. Yeah, it's in your benefit. Might as well do it since you're going to be creating content in the Academy anyway. Let's go through some disclosures, and then we'll jump in. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in here, and we've got Stan up first, and he's going to go through his coaching for a bunch of different people here. So hold on a minute and get it set up, and then we'll turn it right over to Stan and let you go.
Hey, perfect. So yeah, I will first go over Caesar L. So he was doing a trade over Tesla. You can directly go on the graph. So yeah, overall that's a good trade. I was wondering if he's here, if he could give me maybe more explanation about his system, what he was really looking for. it's great like to see the execution on the left side. But I can't really understand why he took it with Bookmap. Like to have maybe more annotation about why he took the trade with Bookmap, how he used Bookmap in his advantage, like for liquidity, or it was just potentially like, yeah, a big move down and then a leg up and he get in, but I don't see like what he was using with Bookmap. But I don't know if he's here.
Yeah, I don't see him, but he's usually here. So
All right.
oh no, I see him now. Yep, he's here. So
Yeah. Hey. So yeah, I don't know if you have anything to say about it or about how you are looking at Bookmap and why you took like in this example the thread. Um,
yeah, Caesar, do you have your mic on?
Okay, there we go. Sorry.
yeah, perfect.
Okay. Uh, yes, Ed. So I'm usually a pivot trader, but I've been working with, really watching the order flow closely on Bookmap, and especially at these levels where we have big liquidity and it's a fake breakdown and an instant level that gets bought back up. It's usually a trap, in this case, a bear trap. And when you have it like that and you can see the V forming in Bookmap with the order flow, it gives me conviction that, the move is probably done to the downside and we start seeing pressure up. So that I entered on that freight breakdown of 173, like you see there. And my stop was at the low of the 1 minute candle. So I scaled out at the previous highs. Like you can see, that was my first target. And I was willing to let the trade work, but it was obviously making lower highs on the bigger time frame. And it stuffed right into this area of big sellers. Like, it wasn't even an order that was waiting there on my last exit up here. And yeah, you can see how aggressive the sellers came in there and stayed on the book. And that was actually the end of the move there. So yeah, this is different from my normal trades where
Yeah,
I use my pivots and this was just really working on a pure order flow trade.
yeah. All right. Yeah, just because I didn't saw like any about any read about the other flow, like in this case, for example. Like, so I was more wondering about what was your checklist about the fake breakout. How do you understand for you like a fake breakout?
Just when it wicks lower and you don't have, I mean, it's tough to say you don't have any follow through until you don't have the follow through, right? Like that could have easily popped back up and failed. But just getting familiar with how how the volume dots start forming or not forming, and you see I don't know if exhaustion is the right word, but considering how big this order at 173 was and the buying dried up, and it sometimes we break below it, come back up, test it, consolidate a bit, and then head lower. But when it springs up instantly, to me that's a sign of big rejection and a move the other way potentially. And I size
All
these smaller because they're counter trend and they're so fast.
Yeah, true. Yeah, no, but overall that's very good. Like where you scale out. I don't know if you scale just front of liquidity or it was a little bit before for the first scale.
Uh, yeah, just like matching front running the previous high on that big the big white candle. Uh, the previous
Ah,
high
yeah,
since,
yeah,
and then yeah, my second scale was a little bit too aggressive. I think I should have given it more room. But when I saw that doji form right before I exited my last piece, the last little red triangle, um, again, I've said in here many times that I don't hold to targets, so I should have given it a little bit more room. But these signals, like, how do you interpret when we see this large like seller, through about 5 cents almost right above here that held the price down?
Yeah, yeah, that will be all about your money management. I think it's a good thing, like you took some off and even you lock your profit. Uh, yeah, maybe just lower your leverage and leave potentially one runner if you are entering with multiple action. Um, yeah, but it will really depend how you want to manage it. If you are ready to leave a runner, or if you prefer just to take your profit when you see something going against you.
Right, yeah. It's always like many things in trading, it's always finding that balance, right?
Yeah, and how you like to what feel you more comfortable. You know what I mean? Like what is the best for you? We can all trade from different way and take just things that speak to us.
Right.
Yeah,
Uh,
I think Stan, I mean, like, really, I really like your comment and feedback right off the bat about like, well, I mean, yeah, it was a winner, but what's the setup? And um, so it poses the question to you, Caesar, about what exactly is the criteria you are looking for on this kind of trade? And you said that it's rejection. You see the big wick here. But there are many things to consider. I mean, there's high liquidity in here over here in Bookmap, very high liquidity down here. Now, just due to these moving averages, that I see, I know that this is a pullback in a bigger time frame. So, this is a really nice rejection and a pullback on a higher time frame on this minute chart into high liquidity. And then, you can also see here, this is where it dropped from. This is where it came back up, tested. Here's some exhaustion in here. And now Tesla's, like you said, it moves fast and it's hard to tell a lot of times. But typically, I mean, we see this in the futures a lot. Once you start to see volume back up above where it dropped from here, or even at the swing up in here, and you see volume pressure behind it, you're looking for this to reject down here and trade back up into the range, maybe the other side of the range, or at least I really like your profit taking. This makes really good sense to me here. And this one, maybe it would be if maybe I see something in Bookmap in here that there's a big red dot over here where they started to sell hard, hard to tell, but somewhere up in this zone up in here. So I really like your second, or yeah, that's your second take profit, no, third take profit, sorry. That makes good sense. It's not about the doji, it's more about the swing here, and to see if there's heavy selling in there. I can see down here there's some. That's a good area for it to spike, retest, and then for you to take some profit on this on this move back up. That's the feedback that I'd give. Is like the question is like, if you take this, can you take it again and again and again, and do you have an edge? And that would start to allow you to create a criteria checklist for your trade.
Right. No, that makes perfect sense. And this trade is from last week, I believe, and things have not been working. These V recoveries haven't been working as well as they had been, in my practice the weeks last week and the week before. So, it is tough to readjust to the changing market dynamics. And, I guess the moves are just happening so much faster now, especially in the futures, and that just kind of ripples out to everything else. But that is something I'm working on, just to really trying to understand when these fake breakdowns are likely to reverse versus likely or turn into, a continued breakdown.
Yeah, it's tough. I mean, like, I think having the VIX open or keeping an eye on the VIX can be really helpful for understanding some of these moves, or to widen out your reduce your size and widen out your stops a bit, so that you don't get just pummeled. I mean, you can do really well when you get some profits, but it doesn't take long or too many losses to really hurt in this case, if you don't change your size or
Right, that
stops.
makes sense. Makes perfect sense.
So
Thanks, guys. That was really helpful, and I will look forward to reading Stan's commentary.
Thanks for posting and great job.
Thanks, Stan. Thank you, Bruce.
sure. Thank you, Stan and Caesar. So let's see. We'll move
So
on
next
to
one,
next one.
the antimatter.
Okay.
You can directly go in the chat. So it's great to see one of your chart with more key elements than you are highlighting. Like most of the time, yeah, it's very charged, and it's great to see, yeah, the key element like the liquidity, where it tests. In this case, like you recognize the large volume sell delta on the right side on the, I think, CVP. Yeah, exactly. So where seller took control. It's good to see execution through Bookmap. It's easier for us to maybe give comments and to really understand where he took part. So I don't know if you're here, and so I was wondering, like, so why you enter this time? Like, did you try to enter with seller, like potentially time and sales, or if you had like big dots or big relative volume with you when you enter in the short, and why you? I think it was your stop that got hidden, or if you leverage your position. So yeah, exactly. I don't know if he took a stop there or if he just tried to leverage.
He's
But
let's see. He's here. So DNT can we can give him the mic.
so yeah, I will continue, and if he's
There we
here.
go.
Yeah, perfect.
Okay, sorry, can you hear me?
Yes.
Okay. Man, I'm trying to remember this. I'm looking at my phone right now. I think this was a couple days ago, on the trend down that we had, I think on Friday or on Monday, maybe. Sorry.
Oh, no worry.
So I'd have to look. So I'm actually practicing with MES now a little bit. So I entered on, this was just 3 MES contracts here. So, and you're right. Yeah, I did get stopped on one of them. Kind of funny because, if normally the stops stack, but in Bookmap, when you use the multi-bracket tool, you can't really like stack the stops. You have to place them out by like one tick, I think. So I just got
No,
stopped
you
on
can.
one.
You can
What's that?
you can now. Like, but the same stop for all of your position and different targets.
So I got lucky, right?
Yeah. And so I was wondering, like, where were your other stops?
Were they
Because
My other,
they were all
yeah,
together, I think, Stan. He only one got hit though.
yeah,
uh,
right. So I got lucky.
yeah, right. Yeah, yeah, that's funny.
Yeah, that's
Yeah, sure.
hey, it happens, you know, all that bad luck that we have. Like, here's an example of like good luck for you.
Yeah,
Right. Yeah, exactly. And that happens. So I mean, it happens. It happens. And with ES, what I'm realizing, not realizing, but I guess I've traded stocks and I traded options and stuff like that. And I don't know what it is exactly. It's my impulses or whatever it is. But you can actually see my entry. I had a decent initial spot right there that I kind of wanted, right? And I pushed my entry to rush into the trade instead of waiting for it to come back. And one thing that I don't know, but at ES, it usually comes back and mean reverts or whatever you call it, but it usually pulls back and gives you an entry. I mean, since it's not a stock and it's not like it doesn't just pull away. Sometimes it does, but not all the time. Since ES, I think, maybe made up of multiple different equities, it gives you more options for pullbacks. So I mean, what I'm learning is waiting for, like, looking for your entry, and you find a good spot that you want to enter. You can put it there, and you can wait for it to come back to you. If it comes back to you, it, it it might more likely come back to you instead of rushing in, and then you end up having to widen your stop, or you just take a stop. But if you wait for the entry, like, let's say, at high volume instead of putting it where I put it, so I mean, it's something that it's kind of like in my nature from like the past couple years that I've been trading. I really need to stop that. Is going trading ES or MES. It usually can give you a pretty good entry if you just wait.
yeah, yeah, obviously.
Um, this was a trend day, though, I believe, if I'm not mistaken. I don't remember this day. Uh, I'd have to look, so I apologize if I'm
Yeah,
not.
no worry. And so I was wondering, like, if you just have a fixed stop or if you place your stop there because it was, yeah, a point that you don't consider be hitting.
I usually put my stop above the structure. So if you look left, the swing high, where that white arrow is pointing,
Yeah,
that white arrow. So the swing high that has the 205 stops right there. That's where I would put my stop right there.
yeah, right. Okay.
Yeah, but the multi brackets. I put I set it to like 8 ticks, and that's not really a lot of room, so I might need to change to widen it just a little bit. But
Yeah,
I would normally like my stop above the 205, the swing high. So I base it off the structure basically.
yeah. Makes sense.
And as far as profit taking, that also goes to 8 ticks as well to get like risk neutral. But now that I'm trading like MES and I'm using 3 contracts, it's a little bit different. So I'm just kind of, yeah,
Yeah,
I don't know.
it wasn't like you didn't scale there because it was like mid or HVN, for example, or even lower for the liquidity that was.
Well, if you look left, from my first take profit, uh, you see the market broke out right there. So if you see where I have my first take profit, Yeah, right there. And then Bruce drew a line to the left. Yeah, right there. So if that where the buyers were buying and the market broke higher, that's usually a good spot. If longs wanted to engage, that would be a good area for longs to engage. So I would put my one scale right there. And so that I think that was a good take profit there for a scale. As far as the final take profit there, that was at IB low. That was my primary target. And as you can see, there was no reason really for me to like take profit there. The market broke high at IB low, but it didn't really break structure or anything like that. It just had a small pullback, and I think this might have been a trend day. I'd have to look back, but there was strong momentum, I think, in the and there, when you see strong momentum like that, I don't think there's a really great reason to exit. So I could have took profit, but if I had based my exit on structure instead, I think that I would have had a much better trade.
Yeah, if you had your third runner.
Right. But the target was in the IB low. Okay, yeah, I'm looking at it now. So this is Eastern Standard Time, okay? And the IB low is established at 10:30. So when the market broke low at 10:15 a.m., right there, it had a small pullback, and the pullback was up to where? It was up to that large sell delta right there. So anticipating the IB low statistic, which has like a 98% hit rate or probability, it's either IB low or IB high. Well, the market was breaking down. I want to anticipate the IB statistic, so I engage at that large sell delta to hit the IB low statistic. And since it's formed at like 10:30, I was anticipating it, and I entered there for it, and then it happened to hit, and it kept breaking lower, so
Yeah,
I could have held it, but
yeah, obviously. But
so this was the IB low statistic, is what I was saying. Sorry.
okay. Yeah, no worry. That's perfect. Thanks for your explanation. But and I was wondering too, like, you were using a lot of checklists for your thread, and here I can see what you were looking for, really, like a kind of
I don't.
checklist. So I don't know if
Yeah,
it's a plan or if you are trying
good
to vet.
point. I don't have one built for it yet. So yeah, that's a good point. I'll probably maybe build one on this. The IB stat. I liked this trade for a long time, so I'll probably build one on this, and also I'll probably do one for VPOC migration as well. There's trades based off of like Tom in the Trader Lab. So I've been in there for a little while and trying. No one's really built structure around those trades, or like I don't know. It's hard to say because there's not really a method or a way to do it. It's just all kind of based on structure. So I'm kind of trying to build out a database, and the database has checklists on it. And based on those checklists, it gives me a favorability scale of like 0% to 100%. So the IB stat, for instance, how many things need to be checked for it to have, and what favorability does it give me? If it gives me a 50% favorability rate, and a good maximum favorable, and I think that you can take the trade. I don't know if that kind of makes sense.
Yeah,
I'll
yeah.
have to send out. I'll have to send out my database sometime. I'll send it out soon. I've been kind of working on it. I'm pretty slow though, so I apologize.
No worry. Thanks. But yeah, overall, yeah, that's a really great job. I will, yeah, obviously potentially say maybe take more like the flow for your entry and potentially more closer short-term liquidity that come aggressively, but you get your trade, you had your reasons for it, and it play out. So,
Pretty lucky.
if Bruce have anything to say.
Yeah, I have a few comments based off of your feedback, Stan, just to kind of underscore a few of the ideas. Number one, I think you started off with with the order flow, just you really can't see the volume dots very well. So I mean, D&T, it looks like primarily what you're looking at here is market structure, and that's fine. I mean, that's really important, but the understanding liquidity and volume within that structure can give you a lot of insight. And then that can help you build your checklist as well. You've got a lot of things here in market structure, which is great. This is the kind of the really the big piece of the order flow. Big transaction drop, big transaction and drop. This is moving away from previous structure up in here, and then you note that, and now you're looking for your entry. Great, fantastic. It is hard to kind of read the other volume in some of these other areas, but what you have in terms of liquidity is fantastic. I mean, look at this up here. My God, that's just huge. And what is the reaction to that is the important thing. And then you also noted you've got your IB low, and you've got your liquidity down here as well. And that's the justification for your take profit. Now, it being a trending day is a different thing. If you want to open your take profits and try to let it run. I like your justification for this here a lot. I do exactly this. I like to do exactly the same thing. It didn't really do much. In fact, actually, it still kind of did something because it just kind of dribbled through it, but then it retested back up here. So you did have something there that you're looking at. So I mean, that's good justification in my book. I think this in here though, there's a lot of things to consider. Number one, I see, and thanks for trading and showing it, guys. This is so helpful. I mean, we can give really good feedback here because you were right. You put your entry up here, thinking like, well, it's tested here a couple times. Likely it'll spike one more time, and I'll get it. And then you moved it and you moved it down, probably because you saw some selling coming in, and you're looking, okay, well, I'm going to miss it. It's tested here a couple times. It's rejected a couple times. I do it all the time. It's rejected a few times. So I'm looking for it to move right now here. You get one more, and I think your stop is just way too tight because you put it right within this range. I think, and it's really small, which is great, but you don't have a trending move in here. When you have your trending move and you grab it, you can have pretty tight stops a lot of times because it's likely going to work immediately, or it's going to stop you out and reverse pretty quickly. So just take the small stop. But here, this is still kind of range bound-ish. You can consider, I don't know, maybe up above here. You're kind of in the zone up in here as well. It's kind of a difficult place to consider your stop, and your risk management, but definitely away from this little zone in here. I think would be helpful for you. And maybe consider like if that is the case, then don't get all in. Get one in here, one in at the top of the range, one in the middle of the range, etc. And then maybe another one as it starts to go down and you note it, that you got it. you know, so that way, because this game here of trading, it's not exact. It's not like,
Yeah.
you know, I chose this as my entry because I'm going to nail it. It doesn't really work like that. It's a zone.
Yeah.
You know, give yourself a break within that zone.
Hmm. Interesting. Okay.
Yeah.
That's great advice.
And then I see you raised your take profit up in here. I actually like it. I don't quite understand why you put the take profit. Well, I guess, yeah, I mean, you still see the liquidity here. When you moved it down, then this liquidity came in. But you know, I know it's this. I know you see the swing here, but this liquidity is in front of you. So they're going to get filled first,
It was
and it might bounce.
it was just a quick move. Yeah.
Okay.
It was just a quick move. Just to kind of get it down in that zone in that area. But no, yeah.
Okay. Okay. Great. Well, that's all I have.
But yeah, I agree. I would normally probably front run the IB low and the liquidity, like you mentioned, though. Yeah.
Yeah. Okay.
And
Go ahead.
maybe one more thing, if you can maybe give us more explanation about your using of your market pulse absorption and sweep.
Oh, and the market pulse. Yeah. So I'm using a 20-minute training period, and I think it's the standard 10-second half life. Um, so it gives me an idea over a 20-minute period the strength of the absorption and sweeps that's going on. The red is the absorption or the maroon, and the black is the sweeps. And they're both on the same 20-minute training period. So over that 20-minute training period, you can see that first initial buy sweep or buy absorption there. Spiked it up, and then like a few minutes later, like 3 minutes later, sellers come in and buyers absorbing again, and it's pretty. So I mean, it's pretty strong if it's still making it spike over a 20-minute training period. I believe that's how it works. And then the last bubble, the last absorption was really large, and then it did eventually actually break through. Yeah, look at those delta volume bars. The sell delta volume bars, huge. Yeah.
Yeah. Exactly. Um, yeah, nice. Good catch, Stan. I forgot to ask about that.
Yeah, look at the cell delta volume bars. On the first spike, it's really small. The second spike was medium. The third spikes were much larger.
Yeah,
Yeah, sure.
yeah, good. I love the way you're using this. I think you're one of the only ones, DNT, that's doing that with the absorption market pulse. But you've really embraced it, and it's working really well for you. It's really showing
It's
these areas.
it's tough because these higher time frame players, you really don't know what's going on. So you end up watching the reaction and gauging it with with your time frame that you're trading in. We're day trading, so you place that. Yeah, it's kind of tough because you don't really know, but and especially icebergs, that's even tougher.
Yeah.
Yeah.
Yeah, but I'll keep messing with it. Any feedback on it too would be nice. So
I mean, I don't have any feedback. This is a really nice signal. Or I should say, just indication here that a lot of absorption there. So fantastic.
yes, it's pretty interesting stuff. Just watching it over time, you'll notice like a lot of activity right there, and then the activity actually kind of dies down a little bit on the pullback too. Look to the right, like activity has actually completely died out to the right
Over in
after
here.
this activity. Yeah,
Yeah.
yeah. After this strong activity here, the market starts to die down a little bit on the sweeps and absorption, and you get that pullback to that large volume delta, and there's no activity. It's just like a low volume pullback.
See how much that helped you? And
Yeah.
you're looking right at it, you know? So
Mhm.
you know, that justified your entry. You knew that you were looking for a pullback into this area. And this is one more comment I forgot to make, and I just echo Stan's feedback of like checklist. Put that together. I mean, you can very quickly just put a checklist together here of like, I'm looking for tons of absorption, a drop, a pullback, 2 tons of that absorption, looking for and justifying an entry in there, and looking for volume dots and high liquidity on the offer, and then target high liquidity on the bid. And you know, you've already got a really good start on your checklist right there.
Oh, cool. Thank you. That's a good point. I appreciate the guidance.
Yeah, sure, no problem. That's what this is all about. And open the mic and hear what you have to say.
Woo.
All right.
Thank
Should
you
we?
guys.
You're welcome. You're welcome. Stan, you ready to move on?
Yeah,
Okay.
perfect.
Got Rob. I think
Yeah, sorry. Yeah,
an
Rob.
E in here.
Yeah,
No, it's just fine. I'm just
yeah,
joking. But
yeah.
yeah. Okay. Do you want me to open up the image, or do you want to? Is there
Yeah,
anything?
no, I think the first image was just below it. Yeah, yeah, exactly.
Okay.
Just under.
Oh, the next one. Okay.
Yeah, exactly.
Okay.
Yeah, it's yeah, perfect. So that's the first one.
Huh?
Um, so it's great to see a bit like more the context, what he was looking for. Uh, same, I don't see any checklist. So it would be great to explain us exactly what you were looking for to take part of it. It's great to see like more slides with explanation about like elements in the liquidity. If you take the first images, you can go in the first one. Yeah, perfect. So we can clearly see like the high liquidity that came in. And so I was wondering like why you took the long at this time, uh, because it's quite like a moment where you don't have like those short-term liquidity. If you are looking, exactly over there. So I don't see any real conviction from buyers. So I don't know if you were just looking for a putback at this time or if you had any confluence with the order flow. As you mentioned, like for example in the liquidity that just came in.
Yeah, hey, what's going on, everyone? Stan, Bruce,
Thanks.
traders.
Hey,
Good to
Rob.
see everyone. Hey, so actually, Bruce, we talked about this trade last week. Actually, this wasn't a trade I took. This was just me, and I'm kind of reading my Discord post, and I don't think did a good job of clarifying that. This was like an example of what I'm not looking for my setup. So, that other image that you looked at, the not this one with the warning sign, but this. Yeah, so that's an example of like, okay, so what my setup is like is it's a breakout fake out, right? So I want to see price get up above a range, buyers push it, and then sellers are going to push it right back down and then take it to the opposite side of the range. So what I'm noting here is like, yeah, so I wouldn't take this as a fake out reversal because one, the first note is I like more of a rounded breakout. Like I'd want to see that price get up higher and really get away from the level before being slammed with sellers and pushing back in. Two, I didn't really see a lot of buying volume. That second note, not enough volume. I didn't really see a lot of buy volume on the volume bars at the bottom. And then when the selling came in, I thought, while I was looking at this, I was like, man, if anything, this is the fake out, right? These sellers are going to get faked out and price is probably going to go to the upside. I didn't take that setup because it's not a setup I take, and it's something I'm kind of working on developing. But yeah, so again, this is just notes, not a trade at all. And I actually trade on Bookmap, so you'll see my trades on any of my posts.
Yeah, great.
And And then
exactly.
for the second one with the exclamation point, that's actually a setup that I'm looking at developing, but not one that I took at this moment. But so that big push that you see right around 654, you see that kind of, that's that previous image you were looking at the beginning of that. So that first little hump above the breakout zone, that's what we were looking at in the previous image. And you get this push up, right? Now it starts to come back. Here I was looking for a reversal, or like this whole breakout to get reversed into, but I just never saw it break the level. And then when that liquidity came back into book, I ended up just stopping out and getting out of there. So you could see I have those stop limit orders on the far right side. I actually pulled those because once I saw that liquidity stepping in and defending the top of that range, I thought, okay, the more than likely this is going to hold, and it's going to, maybe retest the top of that range and then go up higher. And I think that's actually what happened. So
Nice. So you were shorting at this time, and
right, I would have shorted it.
yeah,
Yeah, I would have shorted it from the top of that range and taken it to the bottom, but I ended up just not doing anything here and staying away and saving my money.
yeah, right, yeah, because I was more thinking about a bull flag actually.
Right. That's kind of what I was noticing too, and so I
But so
just
that's
didn't
great
want to take it.
if you could recognize it and cut your loss. Uh, that's great too. Um, and at this time, like, where did you enter?
I didn't enter at all.
Oh, yeah, right.
Yeah, he was down here, Stan, but didn't get filled.
Yeah, right.
Yeah, and I'm sorry, I could have probably done a better job at explaining what I was doing here, but that's this was just notes on what I wouldn't look for in my setup.
Yeah, but that's great too. That's yeah. Even if I think you should probably look more for what you are looking, it's good to know what you don't want to see.
Yeah, and that's the kind of way that I mean, try to approach it. I can't remember who. I feel like it was one of the mentorships recently that someone was saying, like, I think it was you, Bruce, that trading a lot of the times is just waiting, right? You just wait and wait, and then when you see your signals, you just don't hesitate and you pull the trigger. And
Yeah.
so this is kind of helps me not only identify when I want to enter, but also when I don't want to enter. And it just helps having those kinds of images up that I can kind of refresh my memory on. Because, when you're in the heat of the moment, you could totally get pulled into a trade just because you see a bunch of red dots and you see a bunch of, what looks like price action that's going to work in your favor, but ultimately is just fake out or chop. And so that's kind of why I like every once in a while throwing out these images, being like, you see something like this, you should probably stay away. Even if it does work out, if it works out, it's because you got lucky, not because your setup was actually there.
Yeah, yeah.
Yeah, that's a great comment. I really like it. Like, because like if you get if you have a winner on something that is just not really your setup, and um, you can't really justify it. It doesn't meet your criteria, and you take the trade and you get a winner. It can really mess with your mind. It can be a real setback. It is way better to get stopped out on the proper trade criteria. Go back and look at it, and would you take the trade again? And most likely your answer is going to be, yeah, I would. I just got stopped out on this one. And because your setup, your edge, and you just continue to take it again and again. Yeah, and then just manage the risk. So yeah, it sounds like you're kind of getting there, Rob. Like, you know what you don't want, and you know what you kind of do want too. You're studying that with that fake out breakout. And putting these pieces together, and then you're starting to notice it in the charts. This is what I'm looking for. Now that's gonna lead to your criteria.
Yeah, exactly. And you also mentioned this, Bruce, and it's something I've been embracing. Is every day I try to replay the day. So I'll trade, and then later on that evening, I'll replay the day and try to find all those little pieces of confluence.
Yeah.
So, for example, I've been noticing a lot with the iceberg. Like I had a trade recently where I got impatient and I ended up cutting a position. And after the fact, I was like, wait, this gigantic iceberg came into the order flow and held price. Yeah, I got a little choppy afterwards, but then I got the move in my favor. Why didn't I hold the trade? And so those little things, then I'll replay that trade and I'll play it like I should have. And it just kind of helps ingrain, all those little variables, all those, I guess it's that, right? Variables and components of the trade just helps them ingrain them a lot more. So
Absolutely.
definitely, good advice I really have to harp on and, advise anyone else who's either struggling or developing a trade. That really does help.
The replay mode.
100%. Yeah.
Yeah.
And again, like even replaying a trade that I messed up or I could have done better, you know, I know it's not real money at that point, right? I'm replaying a day, but it's kind of like you almost kind of get like a do-over, right? You can almost like redo the trading day and be like, all right, this is how I should have traded it. I'll make note of that for next time.
Yeah. 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 I really like it, because it's exactly that. Like, how many times, I mean, in all aspects of life, like, we have to be reminded like 2, 3, 4, 5, maybe more times. And so the next time you see that big iceberg, you will probably note it, right? And maybe just note
Right.
it again and then look for the behavior around it. You're not sure what to do, but it's in your favor and you're like, well, wait a minute, I think when I replayed it, like, this is what I saw, and it was actually support for that trade, a confluence. So I should stay in it, and that will start to evolve into your trade criteria.
Yep. 100%.
And yeah, and that's how you do it. I mean, this like I mean, the analogies go on and on and on. I mean, like, even machine learning. What is it, for those? Oh, this was a couple of years ago. Like, the uh, automated driving. The way it works is kind of like parent-child. Well, I saw this and I made that decision, and then it kind of slaps the kid, or scolds the kid. No, that's not what you're looking for. You're looking for this, and then it learns. And it's like telling your son or your daughter, like, don't touch the hot stove. It's gonna burn you. And you got to tell them again and again, and until they kind of get it. Yeah, it's the process. So sorry, a little bit of a divergence there. Stan, any other comments?
No, that's perfect. But actually, we can maybe look at the last picture that he sent. So
Sure.
and so yeah, we can clearly see like where he put like his limit stop and what happened after. I was really like considering a bull flag at this time. So we can see like potentially the finality of the trade.
So this is a good example. So right there where you see those trades were, I was looking to get in there. So I got my price pulled away. I got the VPI signal, so the confluence of the VPI with the CVD on the sub chart. I've noticed that tends to be on the buy side. Yeah, I tend to see that actually tends to preface a reversal. You get that pop, and then the pressure dies down. And so I didn't get filled. Price just moved away and started to like hug the top of the range. And when I just kept seeing that liquidity come in, like around that stop around 124, like right, or like what time is it? A little bit before 7 o'clock. You had some liquidity step into the book.
I don't see. I think this is it for the image.
Yeah, it's right there. Look at the time. The time, 7 o'clock. It's right underneath. This would have
Right here.
chopped me
Yeah,
up.
yeah, yeah,
But like,
yeah, yeah, yeah.
yeah. I saw the liquidity step in the book, so I decided just like I don't know. This looks like it's gonna hold. And like Stan was saying, it's like oh this looks like a break and retest, right? Like the top of the range got broken. It's gonna consolidate and then it's gonna shoot up. And so I ended up just staying away. And I mean, that's what my note was there. Like if I had kept trying to get into this trade, I would have got chopped up.
Yeah,
So
yeah.
I just ended up just kind of staying away because it looked like liquidity was coming in to defend the top of the range. And then you had all those, it wasn't a ton, but you had some iceberg orders coming in. So all of that just kind of was like, nah, this is not my setup. So I'm just going to stay away from it.
Yeah, and we can even see like even a bigger bull flag at this time too. Like the big sellers came into high liquidity, then yeah, they are losing conviction, plus like the relative volume from buyers step in.
Where Stan?
Right,
Over on
so yeah, on the left you have
in
clearly like
here.
yeah, so that was like the micro bull flag that we saw on the previous picture. But then you get like the sellers dropping the price into the high liquidity. And then we can clearly see like with the relative volume, like sellers are losing slowly conviction in there and buyers step in. Plus the short-term liquidity just below it could lead, yeah, potentially to the top of the liquidity.
Yeah, yeah.
Right. Yeah,
But
normally what I like to see with this trade, right on the far left where I had my orders, is I want to see a bunch of selling volume come in.
yeah,
And again, that's something you pointed out too, Bruce, recently on when you were looking at one of my trades is, that looks like a bull flag or a consolidation, right? Because look at that low selling volume after that first big pop outside of the range, right around 655, pulls back, but sellers aren't stepping in really,
Yeah,
you know.
yeah,
And so normally what I'd want to see is I want to see that selling volume kick in. I want to see that get high, and that will usually be enough to drive all those buyers underwater and help me get the move to the opposite side of the range. But since none of that happened, stayed away.
nice, nice. Well, like I said, I mean, I think you're kind of approaching it from both sides here, from staying away and also when to engage, which is a great combo.
Yeah, I think what I'd like to do, and I'm not going to do it yet because I really want to get at least 20 of these trades under my belt and see how they perform. But I'd like to almost do like a combo of when it fails, maybe looking for a breakout, right? Because if the breakout reversal fails, then that probably means a breakout's going to happen. And so start looking for confluence of what a breakout would look like. Because then if it's like, well, all these people who are trying to take out the failed breakout, they're going to be wrong. Now you're going to get the move to the upside or the actual breakout trade. So yeah, that's eventually where I want to take this to and be able to play both sides of the trade.
Fantastic. I mean, because like what that's going to force you to read the liquidity, price structure, and volume. You know,
Right.
it's exactly that's going to give you, a higher probable answer. Yeah, fantastic. Great
Thank
stuff
you.
to hear.
Thank you. Thank you.
Stan.
yeah, but yeah, I think perfect. Really, thank you for your work. Keep posting,
Oh,
and
thank you. Thank you. Thank you for the
yeah,
feedback.
really appreciate.
Yeah, I think that's everything that you have, Stan.
Yeah, that's it.
Yeah. All right. All right. Excellent. Well, thanks, Stan. Great stuff as usual. Also, a man of few words, but very powerful nuggets of knowledge in those words. Really appreciate it.
Thank you.
Let's see here. I think I've got a bunch of images in here, and Slowdown's not in here today. We'll start off with Laura though, and Laura's been posting all sorts of stuff, so it's great. Great to see. Let's see here. Okay. And Laura's been taking notes, so really great work. Really great to see the progress here. We made comments last week. You've come in just recently. You've been really aggressive, and you took the comments from last week's academy and then addressed it. So one was to come up with your trade criteria, put it into a checklist. You did it, and then identify these elements on the chart, and then start to manage the trade. Look for your trade opportunity, entry, exit, and your trade management. So really nice stuff. So you got reversal notes. Trend to higher time frame level. Range develops. Okay, so you got that. And then high liquidity as a target over here in these areas. Great. And long entry at the bottom edge of the range, plus high selling VPI in market pulse. So that's very specific. That's something you're looking for. It's for me like I need to look for a little bit more than just capitulation or follow through on market pulse. But if this is how you're getting in, you might want to consider trade management a bit. Maybe it's just one position, and then if there's more buying that starts to come back in, and then some of these areas in here, then you can add another position, and then maybe take some out along the way. Because if you go all in some of the areas that you're talking about, you can really get hurt pretty quickly. I mean, reversals are I find them a lot more challenging, but with trade management, you can deal with it, or at least I can deal with it better. Anyway, you got your higher time frame stuff, you got your liquidity, and then you've got your volume here with VPI and market pulse, volume pressure imbalance. Really nice stuff. And seems to be you're identifying it here, which is great. That's the first step. And then second step is to start to look for your trade criteria. Okay, here's another one. Well, you got your here's your market pulse in here, and is this the same image? I think so, right? Yeah, it's the same. It's just zoomed in. Yeah, a beauty here. Here's your high liquidity. Here's your market pulse, right? You got your CVD and market pulse, and then yep, it never traded into this high liquidity. Funny enough, it went below the swing though, rejected and came back in and then reversed. So, but you have your criteria to lean on, and as you build out your plan. And this criteria, I mean, maybe this is enough for you. As you continue to take more and more of it, you'll know what it is. So here's your trade criteria, entry and exit. Here's your entry after that spike. You do wait for the spike to unfold, and you do wait for a bit of a pullback, which is nice. That helps. I think. I imagine that helps because you know that it rejected here, because it might not reject. It might continue on, and then you take your profit up in here. You've got your IB. You've got high liquidity targets. Now it came up a little bit higher in here, but you had your idea, and you actually moved your stop a little bit here. This liquidity came in, and you front ran it, and that's where you took your take profit here. Good stuff. And Laura, anytime you want to jump in, I know you you don't want the open mic, but that's fine. Would just like to be able to give you feedback. Let's see. I think maybe any text feedback in here. No. And then slowdown is not in here. Yeah. So that's kind of a pity, because I had some real questions in here about some of Slowdown's trade management, what he was going through in here, because this went against him in here. He took some stops, but and then you know, got in and then hit it and then scaled or scaled out in here a couple times, and then had his runner here. And moved it down to the bottom of the swing in the range in here. But really nice to, here's your large momentum and initial pullback, and kind of tricky that you know, went up one more time here, and then actually one more after that. But it's hard, you can't see the edge up here where that selling came in. But that's where it got retested, and then he sees the selling coming in again though here, and gets back in. That's beautiful, because this is where he nailed it, and you know, scaled out down in here, and then held. So anyway, would love to hear more about it, but maybe next time. And some other things from him, kind of more status quo stuff that we've seen before. So maybe I'll go over that another time. And then we got Shark Blue and Rob, and then I also want to go over one with Alan. So Shark Blue, let's take a look here. And so this was just yesterday. I'll open up the mic for you. There you are.
I am here.
All right. So yeah, you got
I'm pulling this trade up so I could see which one it was. Yes, this was yesterday. Can you hear me, Bruce?
Yes. Yep. So well, walk us through. I mean, you got a lot of stuff on here.
I'm gonna pull up my other. So same thing I look for every day as I'm actually this was a little different. I'm looking, my higher time frame thesis is built on opposing supply and demand zones. They're lower time frame zones, typically from the ETH sesh or sometimes the previous day. These lower time frame zones are more recent and seem to be really highly reactive. But if there's a higher time frame zone or level that kind of overshadows that, that's what I'm going to work with. In this case, I was looking at resistance from the previous day, as well as resistance from the end of pre-market right before the opening bell there at 6:30. So as my trend, that trend line I draw for my 1, 2, 3 reversal, when I see that start to converge with those two resistance key levels I'm watching, that's where I'm looking to get into this trade. And for me, it's that all that liquidity on the offer that starts popping in right at the bell. So I see more liquidity
all of
on the
this up here.
offer bid. My 1, 2, 3 reversal is telling me get in the trade. And I also have stacked resistance at 20 and 19.5. Those three things, I'm going to jump in that trade.
Yeah, beautiful. Fantastic.
So this, that Axia webinar that you did with those guys was really good, and it just has me really trying to work on building a position in that consolidation where I'm looking at entering a trade rather than entering and then scaling out of the position, which is what I had been doing at 3 points, as you see in a lot of my previous trades.
I'm sorry, you said the Axia
So,
futures.
I,
Is
I,
that right?
yeah,
Yeah.
it was the webinar you did with them right before you went on the mic. Richard just had some really great insight into getting into a trade with the starter position and being willing to trim that at the bottom of the consolidation and add back to it at the top of the consolidation and continue to build a larger position for the the impending move that I'm actually looking for, which is going to run back to my trend line pivot low or my opposing demand zone. So in this case, as per Crash, I've been working with micros rather than minis, and I find it I guess it gives me more time, right? I don't feel like I'm in such a rush to either get in, make some profit, and then scale out. Does that make sense?
Yeah, absolutely. This is a like a real kind of sea change or mind shift, uh, to be able to look for that and change your habits and do that. It's not. I don't find it easy to make that transition, but because you're always you're always thinking about risk. You can still reduce risk, but you're trying to really build for reward.
The only way I would be able to even consider that mindset shift is, as per Crash's, perpetual teaching is you know, trade trade micros and scale in. So I'm comfortable taking a starter position. If right now I'm looking to build a position of 6 contracts. So if I take a starter position with 2 cons and price is moving against me, well, I'm only going underwater $7, $18, $20. It's not like trading a mini where very quickly if that moves against you, all of a sudden you're down $150, $300, $500. That kind of changes my whole emotional state. So I'm comfortable taking a starter position of 2 contracts, knowing that I'm eventually going to build to 6, 8, or 10. And if price moves against me, I'm okay with it. It keeps me focused on that move that I'm trying to get into. At the same time, I'm comfortable averaging down as long as I'm not jumping in with my full position right away.
Yeah. Yeah, this is great. I mean, like,
You can see my where I added to the trade and then eventually cut out, Bruce. If you can pull up the candlestick chart, the 400 tick chart that accompanied this one.
I don't have it. Hold on a minute to go find it.
Yeah, my executions aren't on the bookmap screen because these are in my Trade of 8 accounts. I'm kind of hopping back and forth, or occasionally trying to execute on both at once. It did not work out too well this morning, but oh yeah, there's the executions. So in the first white box, up in the upper left, that's where I took that first starter position.
Right here, right?
Further to the very upper left corner of the box.
Up here. Oh, okay.
That's where I took that first starter position. And this, the white box kind of shows what's on the bookmap chart. So you can see where I added to that position. What is that? That is, right around 51.10. And then I added to that position again at 08-ish. And then I added again at 07. Yeah, so those are all adds to that position, which I eventually, I covered the whole thing right there at that. It was like 225 or something, and I left. I'm still trying to practice leaving a runner, so I left one runner, which I eventually covered. So I closed everything except one runner, the little blue tick there by the red bar, and then down in the lower right is where I just finally got out of the whole position.
Nice. That's great. You know, there's just a couple of comments, and then Stan, I would love to hear what you have to say as well. The one thing that's, I think, really important from that Axia Futures webinar, as well as your trading performance here, was this was a trending day, and you were looking for that. So if this was a chop day, you would not be looking for this. You would be building a position in a direction, and it might really go against you. So if you're looking for a trending day, then this is a really, more of a trending day, then this is working out really well. If it's not, if it's more of a chop day, and that's kind of what you're anticipating, then you could get really hurt as well.
So at this point, when we're entering a position right at the bell, I mean, we only have a bias or a belief, right? If it's going to be a choppy day or a trending day, we just don't know at that point. We can take a guess, maybe an educated guess.
True, but then I'm hoping that this is where here you can see there's a couple of things, and you noted it here in Bookmap that can help. So in this area in here, it's kind of tough to know. I mean, look at the volume bars, look at the ranges in here, and then but you note the flip here. Here's your flip, and it's really here where you can see the flip.
In that particular area where you first drew the circle, Bruce,
Mm-hmm.
I'm looking at what I learned from Donkey Face, which is the price change divergence, because price is ticking up and our price change in market pulse is ticking down, which to me, exhaustion, buyers exhausting right there in that area.
Right in here.
Yeah, what I have in the pink box is just, I have the arrow going up and to show the price ticking up, and then down below, the price change in the subchart is ticking down. So that divergence on the price change market pulse, and this is what I learned this from Donkey. I wouldn't have figured this out on my own, but that really kind of shows buyers petering out. And then sure enough, we see the VPI spike and CVD converge to print some higher highs, which typically sends price south. And right after that, the volume delta goes from buyers to sellers.
Right. Yeah, great stuff. And also too, I like you got your checklist and your image over here, what you're looking for.
I've done so many of those. I think that's probably version 12, and I've just never been happy enough to post it on my chart. So I put it on, and I end up taking it off. But with some help from Slowdown, just dialing back the amount of text I was trying to put in it, I'm okay with that one. I'll end up changing it a couple times though, for sure.
Yeah. No, it's great. I mean, because you know what you're looking for, and your 1 2 3 pattern. I mean, I love the 1 2 3 pattern as well, and I know it's a head and shoulders up here, but you're looking at the downside of it. The 1 2 and 3 here. That's what matters. This is the part that you're looking for after. But you've got your reasons in here. Here's your supply up here. Here's your supply in here that likely gets filled. And then you're looking for that kind of, now you're looking at market pulse that you learned from Donkey in the price change. Add that into the picture as a confluence and in exhaustion. And then you know, the selling starts to pick up, break a structure, selling starts to really pick up and flip here at this point. And then you're really looking forward to rollover at that point, I imagine. Yeah, great. I mean, I don't know. I kind of summarized it for you. Maybe you had more to add.
No, all I really have to add is Crash's perspective is really a game changer, like I said, because in the way it feels to me is it buys me more patience or more time to work through the entry and the setup and not be in such a rush to cover this trade or even exit early and profit without any real reason, because I'm starting with the 2 lot of minis, and P&L is moving so fast back and forth. I try not to trade P&L, but I don't have to have it on my screen to know what's happening. I mean, my brain does the basic math, and I know how badly I'm getting beat up, or if money's starting to add up, and sometimes I just want to take it.
Yeah. Great stuff. Also, too, I really like the market or the volume delta in here, the trap, and you know, that's where you're going to look for them to get hurt and on the way back down.
I'm going to continue trying to identify that. Stand and slow down have helped with that, and I'm just going to keep watching for it, and I'll stick it there on my chart. And when I can really see it in real time and use it in real time, that'll be great. Because
Yeah.
the trap participants, I really see in hindsight more so.
Yeah, that's true. I mean, but even in hindsight, it can be helpful because you can look for pullbacks to it. You know,
Right.
so like here is a pullback to it here, but the selling hadn't really picked up at that point though, so you don't quite know yet. You know, there's some selling in here, but it hadn't quite picked up. This is a quick move and high selling, but kind of in an odd place. But yeah. Anyway, yeah. I think. Any more comments that you have, Shark?
No, I appreciate the insight, and you talking about minis versus micros and Crash F16, and it's working out well now as I dial in what I'm looking for.
Excellent. It's really great to hear, and I love the way you also are giving credit from others you learn from, and because that's what we're trying to do in here. Exactly, is like help each other, learn from each other. And we got some great traders in here with all sorts of different perspectives and totally different ways of trading. But we can grab bits and pieces from them if they resonate with you, and make better decisions. So yeah, let's move on. And Rob, got you here next. Get over to it. Okay. All right, Rob, are you there? There you are. I don't know if the mic's on yet for you, Rob. Might be away from the screen. Well, anyway, I'm real curious to see what you have to say. And Stan, please jump in anytime.
Yeah, perfect. All right.
But it looks like Rob is. I know he's been looking at anchored VWAP and some other things in here. I do. We talk a lot about market structure. So some of this anchored VWAP is about a very specific structure you're looking for, based off of the anchor. And then you can see how this, like, pretty nicely outline the structure. And if this is something that helps you using that, then fantastic. There's all sorts of ways of looking at the market structure. It could be volume profile on the horizontal. It could be candlestick patterns on the vertical.
Hello.
Hey, there you are, Rob.
Sorry, I had a little issue there with the mic.
No problem. So why don't you kind of walk us through? This is something kind of new I haven't seen from you. So if
Yeah, I know I keep hopping around between things too much, but I was trying to work on that continuation pattern, the flag, for a while, and I was having trouble identifying places to do it, and I thought that VWAP might help. There's a video I watched about it with using the VWAP with the bands, and then Robert Rother also does something similar to that. So
Yep.
I thought, okay, maybe this could help me with continuation, because sometimes you can see price going from an outer standard deviation back to VWAP. And sometimes I have trouble with it because it depends on if it's an inside or an outside day, what you're supposed to do with it. So I'm still working on that.
Okay. Yeah. So just kind of playing around with new tools and mixing that though with older setups to help you kind of guide you or outline some of the structure better.
Yeah, and I'm still working on it. It's still real difficult. I did real good the first week this month, and I thought, oh, I'm on a roll. I've got it figured out. And then these last 2 weeks haven't gone so great because I'm still trying to figure out exactly what I'm supposed to do. When am I supposed to be looking for, going from VWAP to the outside, or from the outside to the inside.
Yeah.
And I guess that could depend on what the day type is.
Yeah, the day type for sure, and the that volume and liquidity within that structure. A little more challenging here with Nasdaq, unless you use that Trader Map Pro. Although you can see high liquidity, at least in this area here, filled, and that looks like also some of it got filled up in here. Yeah, this. Go ahead.
Oh yeah, because like on the left there, you saw those orders getting filled. You got the green bubbles there, and that filled that up. And then you're getting out towards that standard deviation. The bell curve thing. You got 95% of the price supposedly inside of 2 standard deviations. And for people that know about the bell curve thing. And then it looks like it's starting to run out, and then I see that move down.
Yeah.
You got those red bubbles coming down real quick.
Right in
below
here.
that. Yeah, that one.
Yeah.
And then I figure, okay, this is looking like it could head down to VWAP. And then I think I have too many inputs still, because then I'm listening to Market Pulse, and when I got out there, I thought I heard something, and that I guess it made me chicken out. And I didn't stay in till VWAP.
The VWAP being down here.
Yeah, and I forgot if it actually got there or not. I think it did, but it took a long time. I forget exactly how it went.
Yeah. Just a few things that kind of pop out for me. I mean, obviously this high liquidity getting filled in here, and then this kind of volume shooting up here, and how it kind of relates to this volume now. So we see this kind of pivot all the time right around this, what, 17, 9, 10 area, somewhere around in here. How, you know, buyers lift it, pull it away from that area, it comes up, and then sellers come in and pull it right away from that area as well. And they're trying to take control and you know, to see if they can get these guys upside down and get them going the wrong way. And you know, just these, you know, these big shifts in here. So yeah, you identified that, which is nice. And then you're thinking, well, so you know, it didn't even trade up to this standard deviation, traded through this one, likely to trade back down to this one. Then I mean, there's some sense there. This is where this move started, and a retest back into that area makes some sense. Yeah, here I can draw it up better.
And I'm wondering if you took this trade with a flag pattern, for example, like you got your first leg down, like your impulse move, then shallow pullback, plus sellers stepping in, and then you took the shot up to VWAP. So I'm wondering if it was part of your plan too. But the other flop might be a good confluence in it.
Yeah, it's a little bit hard to see on NQ sometimes. You gotta, you know, but I just found like sometimes ES doesn't move the right way, or my trade management's off. And you know, and I talked to some other people. They're saying, "Oh, well, I had trouble with ES too, and then I went to NQ, and that ended up being my thing." So I figured I'd give it a try.
Yeah, good. Yeah, there's some nice decision making or logic in here, that using that trade structure, and then you got order flow within that structure. I mean, it's clear. I mean, it's right here. I think maybe consider, Rob. I mean, like what you know, marking up some of these ideas about, like, well, okay, this is it's trading above this area, but it can't, you know, seem to make it any higher. Now it's trading below that area, so I'm looking for a retest back down to maybe another zone, or I would, you know, match it up with some structure and where buyers came in. Likely you'll get some buyers again, or at least some covering, and maybe some buyers in here, which you do, and that's where you covered your trade. So you know, there's some clarity there in the decision making, which is really nice.
Yeah, I might have to marking these up, you know, immediately after I do them, because you know, if you come back to it an hour or two later, sometimes you forget exactly everything you were looking at right then.
Yeah.
Or maybe I should record it with some narration or something. But you know, I have a lot of trouble putting my whole program together, whatever you call it. You know, getting things organized to where I know exactly what my criteria is, what I'm looking at, what
Yeah.
I'm doing. You know when and why am I doing a certain thing. You know, how to put it together, have it be organized, where I know I'm making progress. Because I'll come up with something, it might work good for a week or two, and then it just goes downhill, and I destroy all of the P&L for the month.
Mm.
That's a lot of trade management stuff too, which you know, I don't know how to get the trade management down either. What kind of formula I need to come up with for that?
Well, one I mean, step at a time. I mean, like it's keep it really simple. Like, you know, you've come up with lots of simple plans before. I guess like you said, sometimes they work for a few weeks and then they don't. But you know, that's where the back testing and like, am I taking the same trade? You know, is it the same thing I'm looking for? And refine it, hone it, and then
Yeah, the back testing, that whole concept is just really difficult for me to figure out. You know, am I back testing this the correct way? You know, I don't know if there's just a particular way I'm supposed to do it. And when I go into replay mode, you know, I'll start running it in replay mode, and I'm like, I'm just sitting there. I'm like, oh, what am I supposed to be doing here with this?
yeah.
I mean, I know it's very valuable, the replay mode. Sometimes I'm just like, oh, I don't know exactly what to do here with it.
Yeah, well, I think maybe will do a couple of webinar events and end of the day, like replay sessions, and go through some replay files. I don't know. What do you guys think? You think that sounds like a good idea? Maybe feedback in the chat there, or we'll put a maybe a post in tomorrow's webinar, and look for that.
Because do you think, you know, if I'm back testing some strategy like this, I mean, am I able to? Because I have a huge library now of replays. I record them every day, the whole session every day. So I mean, would I be able to take several months worth of these replays and
I think
do
it's
back test? I mean, back testing
no.
just puzzles me on
No,
what.
don't do it. I think here, let me bring up Bookmap, and you know, it has to be done during the day, that day. I mean, I would recommend it, at least put it that way, because if you wait, you're not going to remember the day, and you're not going to remember the context. Like this context in here, like what was the move? What was I looking for? What was I anticipating? What was the data like that day? What did Powell say that week or the day before? You know, that's kind of invaluable context. It's going to be completely lost from a month ago or more. So you know, we can just take that simple idea of like, you know, that kind of shift in the market. Here it is here, right? So and start marking it up. That shift in volume, you know, happened here. Here you can see that they tried. They only came up to here though. They can't break it. And then you can look for that shift to maybe unfold again on the sell side. And you start to see the volume pick up in here, but the shift kind of takes place here on low volume though. That's kind of weird. But you see what I mean? Like you saw the shift to the upside and then the downside. Here though, we're looking at the shift only to the downside and it's trending down. You can see that even here they try, but the shift has to take place up here, right? So consider like that as a study maybe. You got to see the volume dots back up above here on the green side. Else, like this is not the shift. You're still staying with this trend, with this idea here. Now here we go. Okay, so it came back up and tested it here on strong volume. Is this a low volume pullback? Hell no. This is a lot of buy volume. In fact, here you can see the shift I'm talking about. Right here, right here to here. You can see it in the also in the bars very clearly. Guys, look for this again and again. I think Shark, Robbed, and a few other guys. Like I forgot to mention that. Look for this shift. It's gonna be really helpful because you don't have to guess anymore. You really noted that shift. Now you can see that they came back down below in here. It rejected though again, on strong volume in here. So once it gets back up above here, you know, we're looking for buy side here, buy side. Yeah, it took a while. It unfolded, but you can see the buy side did come back up into these areas.
Okay, so just to kind of sum it up for the back testing, I do it on the same day. I look for that particular thing.
Yeah,
And
whatever it
here's
is,
how many times it happened in the day.
whatever the thing is you're looking for, do it for that day. And then the beauty, like Rob was saying about the back testing, is that you can trade it, and then you can replay it again and trade it again. And then replay it again and trade it again. Like, what did I do wrong? How could I have done it better? What am I looking for exactly? You will really hone the process. Here's another like shift, and this is a breakout and failure right here. So here's your breakout into high liquidity, and then you see your volume shift below it. In fact, that becomes the pivot for the pullback right here. I mean, it sounds like I'm making it up. This was at the close though, so it's a little bit different. But it's just trap traders shift above, trap traders shift below type of thing. It's something to consider, Rob. I wouldn't say that this is what you need to look at.
They all kind of make it their own little areas of support and resistance there.
Yeah, exactly. And you'll see it. Yeah, it's just an idea. Find out. You talked about. I've seen you for a long time. I haven't seen it in a while. You look for your deep pullback to some of those areas, and then your turnaround. Like you had always noted that with an arrow. You'll see like the move down and then a pullback, to that area, and then the continuation. So this one's a lot different. I mean, we got the close here. We have this massive volume. It kind of screws the whole thing up, but you can find another one someplace. But look for that, whatever that event is, and you'll look for it again and again, and start to put your criteria together, and you'll know exactly what you're looking for.
All right. Well, I'll keep working on it.
Yeah, I hope it helps. Anyway, yeah, just try to keep it simple, something that you can relate to. I think is really the key. Let's see, we got one more with Alan. And Alan's actually is a little bit different in here. Let me show you. We're going to get a little more aggressive with our Bookmap insights and post some of your guys' stuff in here a little bit more. It's on bookmap.com/insights. And we put Alan's in here, so you guys can search them in here as well, and others can search them and come across them. We put Alan's up in here, so others can see it and learn from it. We've got the mic open. We've got Alan here, so I don't know if you want to start to go through.
Yeah, sure. Do you hear me?
Yeah. Maybe lower the volume just a little bit.
Oh,
there.
Better?
Yeah, I think so.
Okay. Yeah, this trade was kind of a mystery to me because you see the top right corner. It's like indicative of a news event or some event, and everyone pulls liquidity. So I would have gotten into the trade earlier, but I said, like, I was checking Forex Factory, any news, like what am I missing? Is Powell's talking? Is Powell burping? Is Powell someone? I go, why is it black over there? I didn't see any reason, so I said, so I got in. What I get? Right, you see where the 10 test stop? Yeah, right there. Because this is also a good example, like for people who look at icebergs in a vacuum. You notice that they cancel the 68 on top, and yeah. So someone would think, oh, they canceled a sell order. That means it should go up, but no, it's going down. And on the bottom, underneath, there was executed 39.
Oh.
No, it was there, but it still went down. So I was looking, I go, there's no liquidity, there's no nothing. The only thing on the chart is POC. And like, I'm not saying any trade is easy, but then it became kind of simple, like, because I know like POC, I'm big with the mean reversion and all that stuff. So I didn't see any liquidity. As you can see, there's really nothing. And it was just like walking down the staircase kind of. And I just figured like it just has like it just has to go to the POC. There's nowhere else to go. Like you see, even below it, there's nothing. It's just went straight to the POC, and like I still don't know why. What else can cause like an area to be black like that if there's like no news event or no nothing? Like that's really like a question I had. I don't know if you know the answer or not, or just sometimes it just happens.
I mean,
And was it like a big volume when sellers came in? Because I saw like when you have like a big move, you have
Yeah,
some liquidity outputting. Like potentially something is changing or it's too
but
big.
everything like like nothing. It's like black. It's like nothing.
Yeah.
Okay, so
So for me, it's when you have like a big move happening, then liquidity shift a bit above
but I don't see really a big move. I see like the tiny short squeeze on the left side, and then it was just like dribbling down. I don't know what time of the day it was. Yeah, so I saw liquidity was pulled. There's no other areas to fill. There's nothing to hit. And I said, I mean, can it be this easy? And sometimes it's just obvious. Like, there's no other place it can go besides the POC. I mean, yeah, hedge fund institutional something could dump or buy, and anything can happen. Nothing is 100%. It's trading, but as you see the screen, there's just nowhere to go but the POC. It was
yeah, but your POC, yeah, and was yeah, at the bottom.
yeah, since it's on the bottom, that's why I don't like taking longs when the POC is underneath it. It's not a real, guarantee, but I prefer if it's like, I rather be above if I'm taking a long or a short, or rather that sure. It's just my personal preference, because like I was like in today's trading, the market was like went up and then it came down, and the buyers are trying to like push it past VWAP, and they just couldn't do it, So that's why like I like to be like on the direction where it can go. So in like this case I was telling you the VWAP was down. So like this is like, like I try not to complicate it too much. I try to just like keep it simple. I don't know if you guys heard the acronym KISS, keep it simple, stupid. Like you don't always have to look for all these. I'm not saying like, all the patterns aren't good and not good. Everything is great, but sometimes like less is more, I think you've seen that from me, Bruce. That's my attitude is like I don't like to. I'm sorry, there's like a little spelling error on mean reversion trade, but and it's a little challenging with the font size because I don't want to cover the numbers sometimes. So that's that. But in my eyes, I see it as a pretty clear and simple, and I just regret not getting in sooner, because there was nothing. There was no news coming out that should have scared me away. Like even like if I took the trade earlier and you see it went up a little bit with some green bubbles, since the POC was on the bottom, I would have stayed in. You know, that wouldn't have shaken me out. Like if you see under the 10 stop run, like if you like diagonally to the right, you see there's like a like I would have gotten in like where the iceberg says 16 over there, you know. But then you see where it says I ended up getting in on yeah, I would have gotten in like there, but I ended up getting in like where the 10 is.
I'm sorry, Alan. Where am
Well, sorry.
this one here, like, or this one here, 16?
What I'm trying to say is that if I would have gotten like where you were pointing before by the left side, if I would have gotten earlier, I would have rode it all the way down. That I wouldn't like you see the green bubble under the 10 stop run to the right. I have the arrow pointed towards it on the right side.
Oh, here
in the middle of the screen. Yeah, the 10 on the other one to the right.
This one to the
No,
right.
To the right. All the way to the right. Where you are, just go to the right.
Okay.
Not to the left.
Yeah,
this one. Okay.
Yeah, that one.
Yeah, got you.
So like, if you notice, you know, there was this was like going down like a staircase, and I would have like that up move wouldn't have scared me at all, just because the POC was on the bottom, and you know, and just the way the market was moving is that I just felt it was just like people just, you know, a little profit taking or something like that. And my idea was right. You know, I thought, you know, once they cancel and a sell license has to go up, or, you know, and they executed. Look how they executed a 39 buy iceberg, but look how big like when it gets to POC, look how big that bubble is. Like on the like to the right, little, yeah. It's a huge. Like it's like I feel like everyone was just like I feel like everyone was like driving on the highway and just didn't know where to go, and everyone just was all just in the drive through the POC lane. You know, like that's what I felt. So I don't know if you have any questions or anything like that, but actually last week I felt bad. I missed it. You know, but beware of Chinese food sometimes. I made a trade on. I know you're big on trading on the heat map, and I made a trade specifically on the heat map just for you. And I missed the session last week, so I apologize for that.
No worries, no worries. But no, we got you in now. I don't know, Stan. I have some comments, but anything in particular, like you were starting to drive at, like maybe liquidity, context, or something?
No, I was just pointing out, like when we have like more volume or move down, some just liquidity is shifting.
Yeah.
I think yeah, just is part of trading. Maybe when we have a move, people are canceling order, putting orders. Mine is shifting. But I like the way where you entered. Like we can clearly see like the red bubbles, like the order flow, like was clearly in your favor at this time. I would maybe potentially suggest to have a first target front run at the 17,880.
Say it again. The first target to where?
Yeah, exactly there. Yeah, front of this liquidity.
Yeah. I usually front run. I think. Yeah, you see, I put the arrow there next to the big red. Where I front ran and exited. That's kind of the same location. Is that the same like area you're thinking of?
Yeah, I was just potentially suggest earlier.
Yeah. I'm always paranoid of that reversal. Like it gets right there and then like boom, just like falls like a knife, like trying to catch a knife. So it's not worth it. You know, that bruising rained in my head. So just front run. it's not worth to risk a whole trade to get another 2 points, you know. And that comes
Yeah,
with experience, I guess.
no, but overall, yeah, great job.
Thanks, Houston.
Yeah, just a couple of things about this black area of liquidity. It's actually in our, our market mechanics course on the knowledge base, not the knowledge base, learning center. It's very typical, actually, Alan, that we see something like this. And Stan kind of nailed it too. Like, it's a pretty strong move. And there's just liquidity. Just no one's interested in following it down. It's kind of a vacuum in here. So this is where, if you do see buyers come in, look out, because it's a vacuum. But no one is interested in here. Look at the buying on some of the pullbacks in here.
Yeah, very shallow.
It's shallow, and these are shallow moves too. So you really nailed it here, and grab the momentum. I probably didn't even go a tick against you,
No, I just regret not getting earlier because I was busy searching for why is it black? Like I was just if I just got it, I would got it in much earlier. But it is what I mean. Whatever. It's trading, better be safe than sorry,
Yeah. But it's. Let me try to bring up an example. Maybe we can see it better in the.
I haven't really seen it besides the news events. I mean, I could be wrong, but I watch it every day for hours, and I never really see it unless there's something, someone's in the talk, if Powell, anything. But now I know it doesn't have to be in news.
Yeah, no, not at all. In fact, a lot of times, most of the time, to be honest, maybe we can see it better in stocks. Most of the time, though, like what you see is like here in Apple, it's just liquidity on the bid, and look at how dark it is under, here on the offer.
Yeah.
Very, very typical. Sellers continue to trade into that high liquidity. It bounces a little bit typically, and then continues on lower into high liquidity. And then you can see this is, I mean, I'm just kind of talking quickly here, but it's very typical in the order flow.
Maybe more stocks. Like maybe you see more stocks because I don't really see it with the NQ that much.
You will see it, and then also this kind of action in here can be followed by the reversal. A lot of times you'll see this high liquidity, very aggressive down in here, trying to push it into here maybe, but people getting filled in here, and then once it starts to lift, then you can look for the opposite move into high liquidity on the offer.
Did it ever hit the liquidity on the bottom, or was it just like
no, it doesn't look like it ever came down here.
Was it a spoof?
No, not a spoof at all. I mean, they were in here for a long, long time. They just never got filled.
Really?
Yeah.
I thought the institutions always get their way, some way or the other.
No, not at all. I mean, like, if this is, Rob looks at floor trader pivots. Others look at volume profile. Others look at Fibonacci levels, etc. This is like real time levels, but it's real demand. I mean, this is where the buyers are.
Yeah, I would have gotten out if you move over to all the way to the right. There's like a little. No, where you were. Yeah, like over there. Like you see here, yeah, where you are. You see it goes like a little red dot right above the. So I would, if I did that trade out, I would have been okay because anyway I front run. Like, so that's a perfect example. Like that trade. If you see a little pink dot. Between 13:30 and 14 o'clock.
Where?
There. Right, now go down. You see if you go down to the little pink dot. I would have got out there anyway, so like it wouldn't have killed me. But that's why that's why I try and hit home. Like it's not worth. And look at that how it reverses on you. Like that would kill. Like that would kill me. Like, why the hell do I need to risk whatever, another 50 cents or $1 just and then lose it all, because that's an algo thing, right? Like an algo trick. They
Well, I don't know. I mean, it's just it never made it there. There was never enough selling to make it there.
yeah.
You can see other little pockets getting filled of liquidity, on the way, after some massive liquidity getting filled on the way down.
Yeah.
So, and then here they start to bid up,
Yeah.
So,
Here I see more that what Stan is saying about like the sharp like use that from the left side as a huge sharp down move. In my example, like I don't think it was really a sharp down move. Like like I've seen that. I consider a sharp down move like when it falls off the cliff like a mountain, like it just goes down. But it seemed to be like a gradual move down. But like I could be wrong because maybe before that there was more data that that's not on the screen. But it was a pretty easy trade. Like wasn't really nervous because I just watched so much. Like I think you could just make a living on mean reversion. It's like all day long. It's just going to the VWAP or it's going to the POC or it's bouncing off the POC, going back to the you could just take 3-4 of those a day and you're good.
yeah, there you go.
In my humble opinion, like you don't have to like learn 10 strategies. If you just master 2 or 3, like the money's still green. It doesn't matter. Like you don't have to make it more complicated than what it is.
Yeah. Get really good at a few, and that might be enough. You're done. Yeah. Guys, we're over the 2-hour limit. My God, we got a lot of. Well, I think it's around there, but I wanted to get a lot of guys on the mic, as many as we can, and get into more detail here, so that you guys can get some more feedback. So anyway, I hope you enjoyed it. Some of you other guys are due next. I'm sorry, not to get to you, but Steven, let's see, Dune Runner, other guys like Rubicon Trader. Look, it's kind of important. You got to fill out your spreadsheet. You got to put the content into the the chat room. We can give you feedback on it, and then we can go over it in these meetings in more detail. Yeah, please, let's do that, and then you'll get feedback from everybody else too. As you heard Shark Baloo mention 4 other people and how he learned from them. That's incredibly important and made a huge difference for his trading. So the feedback is a big part of it here. So anyway, Stan, do you have any closing comments?
No, that was a great session. Really. Thank you for participating and keep going.
All right. Well, thank you, Stan. Thank you, everybody. And we'll just one more note before we go. All next week, we're going to have Pro Trader webinars on trade management. Okay, so we're looking forward to this event. It's going to be, we haven't done a Pro Trader webinar in a while, but with a focus on trade management is fantastic. This is something we should have probably didn't really think about until we started doing the trade management recently in the webinars. So yeah, hope you guys enjoy that and look forward to it. I'll send an email out in the digest here soon about that. All right. All right. Well, thanks everybody. Thanks for coming. And we will see you tomorrow in the webinar.